Hello guys, and welcome to my journal for Wednesday the 30th of September. As you can see from the heat map, I think a mixed picture would be a good way to describe today's trading session. It wasn't a clean sweep by either the bulls or the bears, but I think the bulls might have fared better against the backdrop of a lot of the news headlines we got today. And here are just a few of them. The COVID-19 infection rates rise globally, and are rising in more than half of the states in the US. Nancy Pelosi and Mnuchin failed to reach a deal on the stimulus bill, and the House delays voting on the bill. Moderna announced there will be no vaccine before the election. I think everybody knew that but one person. The US economy Q2 numbers came out today, and the US GDP fell by 31.4%. And finally, yesterday's schoolboy playground fight, otherwise known as the US presidential debate, dampened the market momentum in, not necessarily in the US, but European markets closed down based on that. I don't know why, but that's what the headlines are saying. And against this backdrop, the bulls had a lot of headwind going into today's session, but they still managed to push all the equity indices into the green for the last trading day of the month and the last trading day of the quarter. So it appears that the upside momentum from last Friday still persists, and as we go into Q4, it could gather more pace and speed up. And the net effect is, at the close today, all the equity indices closed higher, with the Dow being up the most. The Dow was up 1.2%. I think all the other indices were up by less than a percentage point, but they were still up. That takes me on to the VIX. The VIX was pretty much flat today, closed at 26.17. It was up by 0.3%. So the VIX remains above the crucial 20 level. It's been above 20 for as long as I can remember, and that is good. That is good for premium selling strategies. There are now 16 days until the October contract expires, and there are 51 days until the November contract expires. That means the window of opportunity for selling the November contract will be open in about 6 days' time. I had no new trade ideas today, but my profit targets on the BABA position was hit today, and I have taken my profits and closed out this position. For the details of this closed trade, you can go to the Trade Alert Forum, or you can click on the link below. Moving on to my open positions, I now have just one open position, and that position is in PDD, and I have one, what I'll call a synthetic position in Facebook, and I'll quickly go through both of them. So PDD, I sold the 75.70 put spread. Let's see where PDD closed today. So PDD closed at 74.15, and the stock seems to be dancing around my short 75 put. I'll review this position on Friday, but that's where it closed today. And the second one was my synthetic in Facebook, and this one I sold the 275.270 put. Facebook closed at 261.90. So both the strikes are still deep in the money, but the stock got a bounce from where it was last week. I think last week it was around the 254, 255. All the options I mentioned in my adjustments recorded last week still hold, and my preference hasn't changed. However, the second option, which was adjusting this position, just got a little bit better. So the option was to sell this 275 280 strike. If I go to my trade tab, that one there, and selling the 270, what was it, 275 280 to convert it into a covered straddle. If I sell the 275 here and buy the 280, last week this thing was netting about 60 something cents credit. Now the credit is about $1. So this adjustment is much better, or the credit is much better than it was earlier this week. Even on Monday, I think it was around 60 something. So if anyone wanted to adjust this position, I think we're getting close to the sweet spot. I mean, $1 is good. I believe someone sold the initial spread for $1.52. If you sell this call spread for $1, that brings your net credit to $2.52, which means your total risk in the trade has now gone down to $2.48. So that is the Facebook, but my preference is still to do nothing. And I mean, we know what it's defined risk. We know what the maximum risk is, and with the way the Facebook is moving, there's no reason why it couldn't be above 275 by expiry. I'm not saying it would be, but there's no reason why it couldn't be there. And that takes me on to my watch list. Watch list today. My watch list today is pretty much the same as it was on Monday, with the exception of PDD, whose IV has fallen below 50 and it's been replaced by SLV. So I'll just quickly go through these one by one. UNG, Amazon, Spotify, Zoom, and Silver ETF. So UNG first. So UNG has got implied volatility of 70, and that's why it's still on my radar. Amazon has got IV of 57. I believe Amazon has earnings coming up soon, in 20 days time. So even if I wanted to put a position on, I don't think I'll put one on in Amazon just due to the earnings coming out in 20 days. The next one is Spotify. Spotify is 51 IV. This one also has earnings around 24 days. So again, unless one is doing a weekly contract which is less than 24 days, I wouldn't put on a spread in Spotify, but IV is high and that's why I hit my radar. Zoom is 52.5. No earnings. I think Zoom announced their earnings a couple of weeks ago, so no earnings on this one. And the final one is an ETF that never has earnings. SLV, Silver. Silver's IV is 41. It is below 50, but it's an ETF and it seldom goes above 50. So 41 is relatively high for this ETF. And that brings me to the end of today's journal. The highlight of today's journal was just I closed out another position for the October contract, and that was the position in BABA. I've now only got one more position for the October contract. Thank you and goodbye.